Good evening to all of you. The today topic is tax credit, input tax credit, in which we are going to discuss section 16, 17 and 18 and certain rules. If you ask with respect to the weightage of this chapter, this is the highest weightage. It is being observed in most of the attempt that you are receiving good question or big question on this topic. We are going to discuss law as well as practical part also. In between, I will ask certain question. Be active on the chat to give the reply. This is my humble request to all the participants. Hitesh, Pooja, Dhaneshwari, Somesh, Meman, kindly all confirm that voice and everything is okay. Audio, video okay? Ayush, Susil, Madhuri, Isha, everyone requested to confirm that audio and video, everything is okay. Perfect. Now we are moving to the input tax credit chapter. See, first I am explaining the language of the law. Input tax credit section 16 talk about eligibility and condition for taking input tax credit. 16 subsection 1, one basic condition, and after that we will read 16 subsection 2, that is main important condition for taking the ITC, on which you can ask or you may expect certain indirect question, not the direct, indirect question. How? We'll discuss. Let me explain you 16 subsection 1. Every registered person shall, subject to such condition and restriction, subject to such condition, please note the word shall is written. It means this condition is compulsion. If we are not satisfying the condition, won't be able to take ITC. Repeating again, every registered person. So if I ask the one question to all of you, can unregistered person take the ITC? Can unregistered person take the ITC? They are saying every registered person subject to such condition and restriction. The same has been prescribed in section 49, the payment manner, rule 36, we'll discuss. But there are the condition mentioned in the act. Be entitled to take ITC, input tax, charged on any supply of the goods or services or both to him. Again, underline one word, charged. Again, like to explain the meaning of the charge. See, for example, Mr. A is a supplier and Mr. B is a customer recipient. B is purchasing certain goods or services or taking certain services from Mr. A, and the tax has been charged on the invoice, meaning thereby they are talking about the forward charge. Meaning thereby they are talking about the forward charge. On any supply of the goods or services or both to him, which are used or intended to be used in the course or furtherance of the business. Please underline this word is business, and this word has to be there in your examination. While giving the reply of any question, if they are talking about certain condition or you are putting something in the working note, please ensure to put the same in the working note that his business, in the course or furtherance of his business, is important one. And the said amount shall be credited to the electronic credit ledger of such person. Now I am moving to the 16 subsection 2. Moving to the 16 subsection 2. Notwithstanding anything contained in this section. Notwithstanding anything contained in this section. Remember that 16 subsection 2 is starting with non-obstant clause. What is the meaning of the non-obstant clause? It means it is overriding to the other provision. Notwithstanding anything contained in this section, no registered person shall be entitled to take the credit unless. Now they are talking about certain condition. These condition is compulsory. First condition, he is in possession of the tax invoice or debit note issued by the supplier, registered in the GST Act or any other tax paying document as may be prescribed. The condition number one, that he is in possession of the tax invoice or the debit note. So if Mr. A is a supplier, Mr. B is a recipient, then we should have the tax invoice or the debit note or any other document, tax paying document, where it is written Rule 36. Where it is written Rule 36, we will discuss what all other document can be the base for taking the input tax credit. He is in possession of the tax invoice or debit note issued by the supplier, registered under this act or such other tax paying document as may be prescribed. What are the tax paying document? Let's move to the Rule 36. Rule 36 talking about ITC can be availed on the basis of any of the following document. Can anybody confirm me? I am not getting any reply. Please confirm me who is paying the tax under reverse charge. Who is paying the tax under reverse charge? Kindly confirm. So I would be able to see. I would be able to see that you are able to connect with me. Kindly confirm who is paying the tax under reverse charge. Moving to the Rule 36. It can be invoice. It can be debit note, which we have discussed, and the second point is talking about invoice issued by recipient receiving goods and services from unregistered supplier along with proof of the payment of the tax in case of the reverse charge. In case of the reverse charge, the tax will be paid by the recipient, and if supplier is unregistered, remember this point, we will again discuss the same thing in the invoice chapter. If the supplier is unregistered and the tax is being paid by the recipient under reverse charge, can be example of the goods transport agency, can be example of the legal service taken from advocate, any other multiple examples are there. Multiple examples are there, but in that case, if supplier is unregistered, then recipient has to make one self invoice. Make one self invoice. You can write down according to the section 31 subsection 3 clause F, there is a requirement to make the self invoice. If the supplier, suppose if advocate is registered in the GST, Mr. A is an advocate registered in the GST, and Mr. B receiving the services and paying the tax under reverse charge. In that case, whether there would be any self invoice, answer is no. Why no? Because in this example, A is a registered person, and according to section 31 subsection 3 clause F, the requirement to issue the tax in the requirement to issue the self invoice will only come when supplier is unregistered. Thank you so much. I have received the reply from almost all the participants. What can be other document? Debit note, bill of entry, or any other similar document under the Custom Act. What is that bill of entry? If I am purchasing the goods from out of India or from SEZ location, then I have to file the bill of entry for home consumption, on which there would be the basic custom duty, there would be the social welfare cess, and there would be the IGST, and that IGST I would be take benefit. So the bill of entry would be prescribed document for taking the ITC. revised invoice, document issued by ISD, input service distributor, etc. Going back. So what was the first condition? The condition number one was that there has to be tax invoice or debit note and any other tax paying document. So we are reading 16.2. First condition is satisfied. Now what is the next clause B? And this time there is an important amendment. There is an important amendment for all of you. 16.2 is talking about the condition with respect to the ITC, in which new clause has been inserted, clause AA. See, clause A, and after that new clause, then next clause. What is the new clause? That clause AA talking about details of the invoice or debit note. Okay, let me talk about what is the input service distributor and what is the letter of credit. I will tell you, Sneha. See, what is the input service distributor? Suppose company A is having the head office in Mumbai and he has the branches. The company has the branches, multiple branches. In the GST, there is a concept of input service distributor. For example, company is arranging the audit services from outside. The auditor has raised the bill to the head office. Now there is no output supply of that head office. Whether company head office GST number would be able to use that ITC? Give me yes or no. Repeating the point again, company A, head office Mumbai, he is not having any outward supply, but he is arranging the audit function for the branches and for head office, for which chartered accountant raised the tax invoice to that company head office Mumbai. Will that head office entitled to use that ITC, utilize that ITC? Answer would be no. Answer would be no. Why no? Why no? Sir, we would be able to use the ITC against the output tax liability. Because there is no concept of the refund, it is very limited purpose. We will not discuss because it is not in our coverage. Then government, the GST law is saying that you can take the registration under the ISD category. You can take the registration under the ISD category. What is the benefit? That if any input tax credit on account of the input service is there, see, input tax credit on account of the input service is there, you can utilize. You cannot utilize. You can transfer the same to your branches using the ISD concept. So my branch, so in this case, the branch will have the document which is issued by the input service distributor. It is given that document shall at least contain the GST. Who are saying, Pooja, who are saying that the person is registered? In this example, head office is also registered person, branches is also registered person. But the problem is auditor raised the tax invoice to head office and head office cannot use the ITC. So they are using the mode of ISD for transferring the input tax credit. Kindly confirm, Reddy Singhal and all other participants. ISD concept is clear to all? ISD concept is clear to all? Kindly confirm so that can move to the next point. Now, we are talking about the new condition, and again repeating, very, very important. This has changed the concept for taking the input tax credit. What is the condition? The condition is the details of the debit note in respect to the said supply has been furnished by the supplier in GSTR1 and detail has been communicated to the recipient of invoice or debit note in the manner specified in section 37. Uda, just wait for some time. Tax paying document in page 6.1.3. Fine, no problem. I'll come back. I'll come on this point. Please wait for 5 minutes. Now the point is, we need to understand what is the GSTR1. We need to understand what is the IFF. We need to understand what is the GSTR2B, GSTR2B and 2A. Then only we would be able to understand the new condition. Fine. Let me move to the whiteboard and trying to explain to all of you. Pooja, I got your point. You are talking about 36 subsection 2, rule 36 sub rule 2. We will come on this point and then explain your question and try to resolve your query. But before that, try to understand what is the GSTR1, what is IFF, what is 2A and what is 2B, and what is the relevance on the ITC condition, and also how it impacting the new clause 16(2)AA. Fine. Let me talk about with the help of an example. Mr. A is a supplier and Mr. B is a recipient. Mr. A is a supplier, Mr. B is a recipient. Any idea about the GSTR1, GSTR2A, 2B, 3B? Any idea about 1, 2, 3? Any idea? Please let me know. You should interact with me. Give the reply. Let's say A has made the supply of rupees 1 lakh by charging the GST, say 5,000. The invoice, total invoice value would be 1,05,000. I am assuming both parties are registered in the GST, A as well as B. Now the first condition, 16(2) first I'm talking about clause A. What is the first condition? There has to be the tax invoice or debit note. No problem. Fair enough. Now the new condition 16(2)AA is saying that supplier has filed the GSTR1 and the same has been communicated to the recipient. Now what is the GSTR1? GSTR1 is the details of outward supply. GSTR1 is the details of outward supply. It means to understand the same. I'm not using the technical word. In the layman language, if I like to understand what is the GSTR1, I will enter my all sales, my all supply, my all outward supply on which I am paying the taxes. Sorry. On which I am paying the taxes. I will enter the same in the GSTR1. There is two concepts in case of the monthly or in case of the quarterly. So there is a concept of IFF for quarterly return. They can add the transaction of B2B. What is the meaning of B2B? Registered party to registered party. So in case of the monthly taxpayer, they will file the GSTR1 on a monthly basis. In case of the quarterly, who is filing the GSTR1 on quarterly basis. However, for month 1 and month 2, they will file IFF. What is the full form of IFF? Invoice Furnishing Facility. Now, they will pay the taxes by GSTR1 or IFF? No. They will only report the outward supply. What is the benefit? In my example, going back, in my example here, when Mr. A will file the GSTR1, if it is monthly, or IFF in case of the quarterly for month 1 and month 2. There is a automatic population, auto population in the recipient GST portal. In the recipient GST portal, it will reflect in GSTR2A as well as in GSTR2B. For the time being, please understand that this transaction would auto populate in the 2A and 2B. Now, Mr. B would be able to take ITC only when the transaction is appearing in the 2B. See, prior to 1st of Jan 2022, the condition was talking about the 2A, and with effect from 1st Jan 2022 onwards, the condition for taking the ITC is talking about 2B. You will ask, sir, where it is written? Rule 36 sub rule 4. We are going to discuss, but please confirm till this point, is it clear that supplier will file the GSTR1, it will auto populate it in the recipient GSTR2A as well as 2B. Till 31st December 2021, we are looking 2A for taking the ITC. But from 1st Jan 2022, we are looking the GSTR2B for taking the ITC by virtue of the new condition 16 to AA. Is it clear? Kindly confirm. So in my own language, I can say GSTR1 is the details of the sales and GSTR2A or 2B is a purchase register, but auto populated purchases are coming in that. Fine now. If you have any question, you can ask right now, because otherwise the going forward discussion would have some impact on the 2A, 2B, 1, 3B, IFF, etc. Now one point I need to clear, that what is the difference in 2A, 2B. That point I yet to explain, but till the time, whatever we have discussed, is it okay? Only 2B. Now the difference in 2A and 2B. See, you tell me one thing, you will be able to understand the difference. What the government want? Government want the timely compliances or late compliances? Government want the timely compliances or late compliances? Simple question, give the answer. What the government require? The government require that every taxpayer has to do the compliances before due date, by the due date, or they have to compliances even after the due date. They will need the timely compliances. This is the source of this concept that government like to make compulsion to do the compliances. How, sir? Now suppose in my example, A is a supplier, B is a customer, B is a recipient. B will take the ITC. What happened earlier, that suppose we are talking about the June month return. See, the due date of the GSTR1 for monthly is 11th after the end of the month, or 13th after the end of the quarter, or IFF it is 13th. What is the difference in 2A and 2B, and why they have shifted to 2B? This part I am explaining right now. If suppose the Mr. A has filed the GSTR1 by 11th of July, it will appear in 2A as well as 2B. No difference, it will appear in both. Now, if the supplier Mr. A filed the GSTR1, say today, 15th July, it will appear in the 2A, but it will not appear in 2B. This particular transaction would goes to the next month 2B. This particular transaction would goes to the next month 2B. Meaning thereby, A is making the supply to B in the month of the June. Value is 1 lakh, tax component is 5,000. Supplier, if supplier file the GSTR1 by the due date or IFF by the due date or quarterly, monthly 11/13, then what happen? It will appear in the GSTR2P, and as a result, he would be able to take ITC in June month. But if the supplier filed the GSTR1 but not by the due date, the recipient, Mr. B, won't be able to see this purchase in the GSTR2B of June. Then kindly confirm, is it not a loss? Is it not a loss to the customer? Is it not a loss to the recipient if the supplier not doing the compliances in time? If the supplier is not doing the compliances in time, is it not a loss to the recipient? Tell me that if the supplier filed the GSTR1 by 15th, will Mr. B able to take ITC? Will Mr. B able to take ITC? Answer would be no. Answer would be no, because the same transaction would not appear in 2B in the same month, it would appear in the next month. Fine. Moving to the GSTR3B. What is the GSTR3B? Again, it is a monthly or quarterly return. It is a monthly or quarterly return. What is the due date in case of the monthly? 28th after the end of the month. What is the due date for quarterly? They have divided in two parts, 22 or 24, depend upon the state. So they have divided India in two categories of the state. For some state, they have kept 22 after the end of the quarter, and for some state, they are keeping 24. What is the difference? Why they are doing so? So actually on the last day, there should be less load on the system. The system should work smoothly. That is the main reason to divide or to put the date on the staggered manner. Please confirm, is there any issue in voice? Please confirm, is there any issue in voice? I think from my side is everything okay. So miss, I should say instead of the ITC lapse, it will be not available in the same month, it will be goes to the next month. Aishwarya, recipient can avail the ITC only when it is appearing in the GSTR2B. Now from 1st Jan 2022, after inserting the new condition 16(2)AA, ITC would be available only when the transaction is appearing in 2B. Now you may expect certain question on this particular clause. Thank you, Pooja. Little much because it's raining. Actually, it's raining. That might be slight. You may feel slight issue of the network, but not a big issue because it's raining right now. Try to understand how the department is trying to create the compliances to be done in time. So I hope it is clear. Moving to the chapter. Please read this language once again. The details of invoice or the debit note in respect of said supply has been furnished by the supplier in the statement of the outward supplies, that is GSTR1, and such detail have been communicated to the recipient. But how it is being communicated? It is not written in the clause. Sir, where it is written? It is written in the Rule 36 sub Rule 4. What is the Rule 36.4? Again, Rule 36.4. Earlier it was talking about 105%. Before that 110%, before that 120%, something like that. See, please note, all these condition has been gone. Now nothing is there. What is there? When the transaction will appear in 2B, then only you can take the ITC, and you cannot take any extra ITC. You cannot take any extra ITC. Before amendment, even if there was late compliances, then also input was available. Answer is yes. However, there was a circular 123 which is imposing certain conditions, but now we are not required to do any discussion on that. But that was an issue because 2B was not available. They have implemented the 2B and now they have made applicable on 1 Jan 2022. Read the Rule 36.4. No ITC shall be available in respect to the invoice or the debit note which are required to be furnished under 37 subsection 1 unless, what is the unless? The details of such invoice have been furnished by the supplier in the GSTR1 or IFF, okay, and the details has been communicated to the registered person in the 2B. In the 2B. Therefore, now I can say ITC can be taken only for those invoices whose details are reflected in the 2B, that is respective supplier have filed the GSTR1 and you should write due date, by the due date. Earlier, ITC in respect of the invoice of the debit note not uploaded by the supplier also be available up to 5% of the eligible ITC in respect of the invoice or the debit note. Please confirm this amendment is clear to all. Please confirm this amendment is clear to all. Please confirm this amendment is clear to all. Definitely, Sneha Garg, I will definitely show the GST portal also, but not now in the written chapter. In the GST written chapter, I will log into portal and will explain certain part in this chapter. In this particular relevant section, I will discuss. Sure, I will sum up. So, what is the amendment? What is the amendment? Now I am trying to do sum up of this particular entire discussion. When this condition has been inserted, 1st Jan 2022, where this condition has been inserted in the 16th subsection 2 as a new clause. What is the condition? They are saying supplier has filed the GSTR1 and the same has been communicated to the recipient. What is the meaning of communicated? Rule 36.4 is saying the same has been appeared in the GSTR2B. GSTR2B. When it will appear in the 2B, if the supplier file the GSTR1 in case of the monthly or IFF in case of the quarterly by the due date. This is the entire summary of the changes. Is it okay? Karthik Gupta and everyone. Everyone is okay with this changes? Whatever the changes is being made? Great. Now, (16.2) is starting with the notwithstanding anything content. First condition we have discussed, and after that next clause new condition. Now I am talking about third condition. He has received the goods or services or both. Now they are talking about the explanation. and they are saying in the following case, it will be deemed that recipient has received the goods. One thing is clear now. Please confirm, but now it is not there, sir. Ayush, now it is not there. The 5% was available till 31st December. Now that condition has been abolished. 36(4) has been entirely substituted. Now you can take the ITC only when it is appearing, otherwise no extra ITC. Sir, you are saying that updation in 2B is automated, then what is the relevance of communicating? Communicating, they are saying the way of communication. See, there has to be the way of communication. It can be online, it can be offline, because the GST, entire GST is based on the automation. Everything is online. So the way of communication they are saying in the GSTR 2B. GSTR 2B is auto-populated, but they have to say now the transaction is appearing in 2B. So how they are saying? They are saying it has been communicated. What is the mode of communication? Automation. Like notices. In the GST notices, when you come to the CA final, and then we'll discuss that there is a provision that GST notice should be communicated. How? In the GST portal, automatic. When you upload the same, it will be available to the customer. So because of the GST, the automation is there. So everything, most of the things are automated. Now the point is, the third condition is saying that recipient has received the goods or services. So finally, correct, no problem. You may have some question. In practical question, there might be, they are saying you have purchased the goods or service, taken the services in the 15th June, let's say. You have the tax invoice, transaction is appearing in the 2B, but the goods has been reached to you on 2nd July 2022. Would you be able to take the ITC in the month of the June? What do you think? Would you be able to take the ITC in the month of the June? Answer would be no. Why no? Sir, we are talking about all the condition has to be satisfied. See, all 5 conditions. It is not that 1 or 2 condition to be satisfied. No, sir. When you are taking the ITC, you had to ensure all the 5 condition is being satisfied, and then only you can take the ITC. But sir, goods has been reached to me in July. Whether we can say that condition is being satisfied given in the clause B? Answer is no. In that case, in this case, the recipient won't be able to take ITC in the month of the June. They have to take the ITC in the month of July. Fine. What is the bill to ship to model? I hope you all have completed you have done the concept of the bill to ship to model. Please, all are requested to confirm what is the bill to ship to model. All are requested to tell me what is the bill to ship to model. Give me some brief about the bill to ship to model. I am waiting for your answer, sir. What is the bill to ship to model? No problem. Mr. A belongs to Delhi. I am explaining right now, but you all have to give the answer, sir. Kindly requesting everyone. You all are need to give the confirmation. Is it clear or not? A belongs to Delhi. Mr. B belongs to Mumbai. Okay, no problem. No problem, Pooja. Fine. Now, Mr. A purchasing the 10 laptop. Mr. B is purchasing the 10 laptop from Mr. A. A will raise the tax invoice. A will raise the tax invoice to Mr. B. Yes. A will send the goods to Mr. B. Yes. B will make the payment to A. Yes. Now I am adding third party. One more party. Now I am adding one more party. Mr. C, who also belongs to Delhi, but he is the customer of Mr. B. Mr. C has given the order of 10 laptop. Mr. C has given the order of 10 laptop to Mr. B. The intern has given the order to Mr. A. Now you tell me, will the movement of the laptop, in this manner, Delhi to Mumbai, then to Delhi? Will the goods be moved in this manner that A will send the goods to B, then B will send the goods to C, or it will be moved directly A to C? You tell me, will it be directly moved to A to C, or it will be moved from Delhi to Mumbai, then to Delhi? Which point I am talking about? I am talking about bill to ship to model. Why I am talking about? Because in the 16.2, one of the condition is talking about you have actually received the goods, but there is deeming fiction, but there is a deeming provision, and I am explaining right now. Explanation 1, what is the meaning of the deeming fiction, that I am trying to explain. All are correct, sir. How it can be moved from A to B, then B to C? It will have the transportation cost extra. Might be there's a chances of the breakage. Might be there's a chances of the delay. In all these conditions, the movement will never happen like this. The goods would be moved from A to C directly. Now try to understand. Here I am creating the difference. The movement, and I am creating the difference, the movement and invoicing part. A will raise the invoice to B. B will raise the invoice to C. So there would be tax invoice number 1 and there would be tax invoice number 2. But the goods would be directly moved from A to C. Now A when raise the tax invoice to B, will the B take the ITC or not? Will B take ITC or not? You tell me, will B take ITC or not? Answer is yes. B has to take the ITC. Now when B raise the tax invoice to C, will the C take the ITC? Obviously yes, sir. Assuming rest all the condition of 16, 17, 18 are satisfied. Now let's talk about Mr. B. In that case, Mr. B has to satisfy all the condition. Obviously, Mr. B has to satisfy all the condition. So let's say I'm moving directly to the clause B. He has received the goods. Now in case of the bill to ship to model, you tell me whether Mr. B will actually receive the goods. Because the 10 laptop has been directly given to Mr. C. You tell me whether B will actually receive the goods. Answer is no. And considering that point, there is a problem in order to take the ITC. What is the problem? Because they are saying Mr. B has received the goods or services. Therefore, they have added the deeming provision. What is the meaning of the deeming provision? The deeming provision means when you are not receiving actually, but in the below case, it will be deemed to be received. What is that case? Bill to ship to model. Sir, where it is written bill to ship to model? Now read the language. When the goods are delivered by the supplier, Mr. A, to the recipient, Mr. C, or any other person on the direction of such a registered person, here we are talking about Mr. B, in case of any movement. then it will be deemed that Mr. B has received the goods and services, and therefore we can say that Mr. B has satisfied this condition also with respect to the receiving of the goods. We all know in case of the bill to ship to model, the billing party will never physically receive the goods, so there is a problem in the clause B compliances. There is not possible in case of the bill to ship to model. That is the reason they are saying it will be deemed that such goods or services has been received. Bill to ship to model, it can be for goods and it can be for services also. Please confirm clause B is clear to everyone. Clause B is clear to everyone. Or in case of the any doubt, please ask. Clause B is clear to everyone, or in case of the doubt, please ask the question. Anu Gupta, yes, it is possible. It can be, see, place of the supply chapter is not in your syllabus, but let me see the place of the supply chapter. Is it there or not? No, it is not there. So when you read in the final place of the supply chapter, you will be able to understand section 10 subsection 1 clause B is talking about that bill to ship to model. So movement can be caused either by the supplier, or movement can be caused either by the recipient or by any other person like transporter. Mode of movement can be anyone, that whether A is making the supply to C directly, or C is taking the delivery from A, or some other person is moving that goods. Doesn't matter. Now, Sneha is asking in bill to ship to model, what will be charged IGST or C? This question is, we are charging IGST or CGST and SGST. Actually, this question is to be answered with respect to the place of the supply chapter. But just to give you a reply, it is not in your syllabus, but just to give you a reply, which tax would be charged, you will see the location of B. You will see the location of B. So when A is raising the tax invoice on B, it will be looked into the B's location. Why I am saying so? 10(1)(b) of IGST Act. So please ignore that. It is not in your syllabus. Because you have asked the question, to satisfy your query, I have given the reply. Somis is asking the question, if bill is made in the name of Mr. C by, no, A is not knowing C, because if A will raise the invoice in the name of the C, how A will collect the payment? Will A will collect the payment from C? So the invoice would always be from A to B, because B will make the payment to A. Billing party means in whose name the bill is drawn. Yes. Then, sir, the opposite of the billing party can be called as a recipient. See, A is a ultimate supplier, C is a ultimate recipient. Who is Mr. B? To understand this clause, let them give the name as a mediator or give the name the billing party. So A is making the supply to C directly. Ultimate supplier is making the supply to the ultimate recipient on the direction of that third person. That third person is Mr. B. If I not file the return in particular month, then recipient can't get the ITC in that month. Yes, 100% true. And specifically after insertion of this new clause AA, yes, this is 100% true. Ayush and rest all the participant was raised the query. Kindly give the confirmation. Is it clear? Next condition, fourth, is subject to the provision of section 41. The tax charge has been actually paid to the government. The tax charge has been actually paid to the government either in cash or utilization of ITC. So this is comparatively problem. For the timing, it is a problem, because if A is filing the GSTR1, then he is only reporting the transaction. But by which return he will pay the tax? I am assuming he is a monthly return filer. He will pay the tax by GSTR 3B. See, try to understand for the clause C. GSTR 1 or GSTR 3B. Why are the recipient affected due to the supply default problem? Yes, we do agree. This is a big problem of the GST. This is the big problem of the GST. Pooja, this is really big problem of the GST, but there is no solution for the time being. You have to litigate the matter, because at the initial stage you will not be able to get any relief, because something is written in that means it is written in that means you have to comply. The condition which right now I am explaining, that is saying that if the supplier is making the default, recipient won't be able to take ITC. It is also called as a provisional ITC. It is also called as a provisional ITC. See, please tell me, you tell me one thing. Supplier file which return, then the transaction would appear in the 2B. Kindly confirm that supplier file which return, then the transaction will appear in 2B. Great, Ayush. No problem. Thank you. I am talking about the transaction will appear in 2B on the basis of which return, GSTR1 or GSTR3B. Give me the answer. On the basis of which return the transaction will appear in the GSTR 2B? The answer is GSTR 1. On the basis of this return, the transaction would appear in the GSTR 2B. But the taxes, clause C, we are talking about the clause C. This was clause AA. See, this was clause AA. Now we are talking about the clause C. Clause C saying that taxes has been paid by the supplier. And if it is a monthly tax filler, the supplier will pay the tax through 3B, through GSTR 3B. Or IFF, absolutely correct, Anupta. But as per the current mechanism, we won't be able to verify. As per the current mechanism, we won't be able to verify whether supplier has paid the taxes on every transaction or not. We won't be able. We in the portal can only see that supplier has filed the return or not. We won't be able to see that what is the taxable value, transaction value in the GSTR1 and what is the transaction value in the GSTR 3B of supplier. I'm talking about, not I'm talking about customer. So that is the reason whatever we are talking about, we are talking about provisional ITC. Last condition, clause D, that recipient has filed GSTR 3B. Recipient has filed the GSTR 3B. Fine. Now I am requesting everyone. In case any doubt, we have the 5 conditions. I am summarizing the entire discussion of 1 hour. I am summarizing the entire discussion of 1 hour. Then you can ask any question with respect to ITC 16, subsection 1 and subsection 2. We have started this chapter with the 16, subsection 1. We are talking about every registered person shall be entitled to take ITC, but the important condition that it should be in the course of furtherance of his business. Then we have discussed 16.2, in which 5 conditions are there. The condition number 1, first point, the 16 subsection 2 is starting with the non-obstant clause, notwithstanding anything content. It means it is a overriding impact. If you satisfy these conditions, then only you can take the ITC, otherwise you won't be able to take ITC. Condition. First, recipient, he has the goods, he has the tax invoice or the debit note, or any other tax paying document. Condition number 2, new clause, clause AA. Supplier file the GSTR1, same has been communicated to the recipient in the form GSTR2B. Third condition, that he has actually received the goods or services. What is the exception or what is the deeming provision? In case of the bill to ship to model, billing party will never receive the goods, so it will be deemed that goods has been received. Fourth condition, tax has been paid by the supplier. And last condition, the recipient has filed the GSTR3B. Recipient has filed the GSTR3B. These are the 5 conditions which we have talked about. Any doubt you can ask or just confirm it is clear. If it is clear, kindly give me the confirmation so I can move to the next point. Or ask any doubt with respect to 16.2. Fine. Let's move to the proviso. First proviso says that in case of goods are supplied in the lot or installment, then on the last lot, credit would be taken. Credit shall be entitled to take the credit only on the last lot or installment. Only on the last lot or installment. Perfect. Second proviso, very important. Very important. What is that? Fail to pay to the supplier. A has issued the tax invoice to B in the month of the June. All the condition has been satisfied. B can take the ITC in the month of the June. In which return he will take the ITC? GSTR3B. Whether B can take the ITC even he has not made the payment to the supplier? Yes, but only up to 180 days. Can B take the ITC without payment? Answer is yes, but only up to 180 days. What is the relevance of the 180 days on ITC? They are saying, proviso says that if recipient failed to pay to the supplier other than RCM within 180 days from invoice date, then this party has to reverse the input tax credit. Recipient has to reverse the input tax credit, and that to be along with interest. For this, we have to go to the rule 37 as well. We are moving to the rule 37, then we'll come back to this part. Rule 37 is talking about same thing, that if the registered person is availed the ITC but failed to pay to the supplier, second proviso, then the amount not paid shall be reversed along with interest. What is the interest? What is the interest? Yes, this 2 point we have to discuss. What is the interest? Applicable interest, 18%. Amount of the ITC which we are reversing in sub rule 1. Why we are reversing? Because of the 180 days. Shall be added to the output tax liability in the month in which the details are furnished. So normally we are saying we are using the word reversal, but if you refer the language, they are saying please add in the outward taxable supplies. No problem. Ultimately, we need to pay the tax to the government. The registered person shall be liable to pay the interest at the rate of notified in the 50 subsection 1, that is 18%, from the date of availing the credit till the date when the amount added to the output tax liability. See, we normally say this concept is claim, reversal and reclaim. Claim, reversal and reclaim. What is that concept? First, Mr. A has issued the tax invoice to B. When B will satisfy all the condition of 16(2), B will take the ITC. So he will claim the ITC. If within 180 days he will not make the payment, he will reverse the ITC. And after that, he will reclaim again whenever the payment is made. Whenever the payment is made, he can reclaim the ITC. Now, on reclaiming the ITC, one important thing, the time limit of the 16(4) will not be applicable. What is that time limit? We'll discuss after the break. We will have the break in some time. After 15 minutes, we will have the break. Just try to focus on the discussion. Anil Kumar, he is not receiving the goods. Yes, in the bill to ship to model, we will not receive the goods, but it will be deemed to be received, so we would be able to take ITC. If that explanation was not there, suppose assume explanation was not there, then was a problem. But now we will not have any problem. Moving back, I was talking about this proviso. What is the proviso? Proviso says if 180 days payment is not made, need to reverse the ITC along with interest. The word is not written as a reverse the ITC. It is being written, please add the same in the output tax liability. No problem. Please add the same in the output tax liability along with interest. And when Mr. B will actually make the payment, say let's say 5 year, 10 year, 20 year, after that he has made the payment, he can avail that ITC. But the problem is the interest would be lost. Cannot recover. Cannot recover. If B has not made the payment to the supplier 180 days, he will reverse the ITC. That ITC can be reclaimed again at any point of time. But the problem is interest. That one. That would be the cost. Very nice question, Angupta. Can anybody tell me on which component this 180 days concept would not be applicable? On which component this 180 days condition would not be applicable? On which component this 180 days concept would not be applicable? In case of RCM, see, if the goods is not received in the hand of C, no one can take the ITC. No one can take the ITC. And also A has to reverse that ITC if he is not getting the payment. Now RCM case, in case of the reverse charge, do agree that 180 days payment is not applicable. Because recipient directly making the payment to the government, so they are saying not applicable. Please confirm valuation chapter is completed or not. Valuation chapter is completed or not. Thank you so much. Now, the one case RCM, it is not applicable, but there are two more cases when the payment is not required. Requesting everyone give me the schedule number, give me the number of the schedule. Which schedule is talking about supply without consideration? Can anybody tell me which schedule number is talking about the supply without consideration? Karthik, ITC will always be claimed for tax part, not the interest. ITC would always be claimed for the tax part, not the interest part. So the interest would be cost. What is my question? That please tell me the schedule number which is talking about deemed, which is talking about supply without consideration. Even if there is no consideration, we will assume the supply. Even if there is no consideration, we will assume the supply. In case of the schedule 1, the transaction, all 4 transactions are without consideration. Sir, all 4 transactions are without consideration. Suppose A and B are doing the transaction which become taxable by virtue of the schedule 1. Example, A is doing the stock transfer to B. A is doing the stock transfer to B. And whether stock transfer between 2 GST number of same PAN is taxable. I'm asking the question to all of you. Whether stock transfer between 2 GST number of the same PAN is taxable. Is it taxable? Suppose A and B belongs to same organization. They are having the 2 different GST number. A is moving the goods to B. Is it a supply? Will A raise the tax invoice to B? The answer is yes. It is a supply. Answer is yes, it is a supply. Why, sir? Schedule 1 para 2 talks about. Schedule 1 para 2 talks about supply of the goods or services between related person or between distinct person. Now, there is no consideration. Still it is taxable? Yes. Why? We are talking about schedule 1. We are talking about schedule 1. Schedule 1 talks about supply without consideration. Now, in this case, whether we will make any payment to A even after 180 days, answer is no. It is taxable. It is taxable. Aishwarya, it is taxable. Refer schedule 1 para 2. It is taxable. Distinct person transaction. Now, if they are taxable, A has to issue the tax invoice. We will take the ITC. What happened after 180 days? Will we make the payment to A? No. Why no? We are making this transaction taxable by virtue of the schedule 1. Even without consideration. And if it is without consideration, will you think about that there will be a payment of after 180 days? No. What happened to that ITC? They are saying, now they are saying it will be deemed that payment has been made. Shall be deemed to have been paid for this supply. Clear? Kindly confirm. Schedule 1 is a deeming provision wherein there is no payment required, even though you are not required to reverse as also. Why I am not required to reverse? Because of the schedule 1. And 16(2) ka proviso. Sorry. So now coming to the rule 37, sub rule 2, 37 sub rule 2. Before that, there is one more deeming provision. In case of 15 subsection 2 clause B, I hope you all know that particular part. I am just giving in brief that if certain expenditure is being incurred by the recipient whose responsibilities of the supplier, and to that extent it is not included in the value. Repeating again, if certain expenditure of which the responsibilities of the supplier but has been incurred by the recipient, and to that extent they have excluded from the value, 15(2) is saying please add in the value. So now that part is being added, but whether payment is required, answer is no, because he has already made the payment. Customer has already made the payment. then therefore they are saying again it will be deemed to have been paid. Let me talk about 16. Let me talk about 36. One second. Yes. This part has been asked by Miss Pooja. Pooja, are you there? Miss Pooja PS, are you there? You have asked one question on this particular page. Please let me know in which part you have asked the question. Here we have discussed rule 36 that these are the documents that should be available with the recipient, then only he can take the ITC. Rule 36 is talking about that following 5 parameter has to be there on the present. Fine. I think you have asked the question on 16.3.13. You have asked the question. Kindly raise the question again, please. So they are saying if it is a B2B transaction, if it is a B2B transaction and recipient is taking the ITC, then please ensure there has to be the 5 things present or mentioned on the invoice. What is that? Tax, description of the goods or services, total value, GSTI number of the supplier and customer. Why there would be the GST number of recipient? Because it is a B2B transaction and we are talking about ITC, and place of the supply in case of interstate. So these 5 things has to be there. You have asked one question probably on this part, that in case of the unregistered person, how the GST number can be mentioned. If it is an unregistered person, then there is no question of ITC, because if the recipient is an unregistered person, he won't be taking ITC, and if he is not taking the ITC, obviously the GST number would not be there. Plus rule 46, we will discuss rule 46 is talking about the content of tax invoice, wherein they are saying if the customer is registered then GST number, if not registered then not required. Clear? Pooja, kindly confirm, or any question please ask. Fine. Now last thing, please read and then we'll have the break. Time limit to take the input tax credit. Time limit to take the ITC. What is the time limit to take the ITC? The time limit to take the ITC is given in 16 subsection 4. Very, very important. ITC to be availed by registered person in respect of the invoice or the debit note, the details which has not been furnished by the supplier under 37(1). Sorry. It is rule 36(4). It is rule 36(4). You can remove this because this has been entirely substituted, which we have discussed. Sorry, I have discussed the rule 36. I was discussing rule 36(4). I need to discuss the 16 subsection 4. This one. A registered person shall not be entitled to take ITC in respect of the invoice or the debit note after the due date. See, there are the 2 dates. Mr. A has made the supply to Mr. B. Let's say the transaction date is 1st of June 2021. It is pertaining to which financial year? 21-22. Mr. B has missed to take the ITC. Even after the financial year, can he take the ITC? Yes. Till which date they can take the ITC? What is the cutoff date? What is the last date to take the ITC? Answer is being given in 16(4). What is the answer? They are saying due date of section 39 return for September after the end of the financial year. Due date of section 39 return, what is that? GSTR 3B. For the month of the September following the end of the financial year, or annual return, whichever is earlier. Normally, the due date of annual return is 31st December. Normally, the due date is 31st December unless until extended. Which date we can take the ITC? 16.4 is saying after the end of the financial year till September. Can we take the ITC till 30th September? No. The GSTR 3B of the September, due date of that GSTR 3B, if it is a monthly, then 20. If it is a quarterly, 22 or 24. We can take the ITC till due date of the September after the end of the financial year or annual return, whichever is earlier. Whichever is earlier. Last thing before break, when the registered person has claimed the depreciation on the tax component of the cost of the capital goods and plant and machinery, if they have taken the benefit of the taxes part, they cannot take the ITC. Example, Mr. A has supplied to Mr. B, let's say, plant and machinery worth of rupees 10 lakh. No problem. I will repeat, Sneha, 16.4 I will repeat. Just complete 16.3 and we'll take the break and then start with the 16.4. A has supplied plant and machinery to Mr. B worth of rupees 10 lakh and there is a GST, let's say 50,000. Mr. B has two options for taxes part. First, either he can take the depreciation on 50,000, he will capitalize entire 10 lakh 50,000, take the depreciation on entire amount, or he can take ITC of 50,000. For 50,000, Mr. B has two options, either depreciation or ITC. Kindly confirm. 16.3 is clear to all. 16.4 is clear to all. I have received the reply from Sneha that it is not clear. We'll revert. We'll give the reply. We'll discuss again. No problem. But for the time being, please confirm 16.4 is clear to all or not, and 16.3 is clear to all or not. $16.3 is clear. Fair enough. Sneha, I will repeat 16.4. No problem. Somesh, both are clear. Great. To rest of the participants. Both are clear. Both are not clear. One is clear. Which one is clear? Kindly confirm, sir. I am requesting everyone to kindly confirm. Fine, Ayush. Let's take a break. Do one thing. I will take one example on 16.3 and also I will take one example on, I will again discuss 16.4. We'll take the break of 10 minutes. We will resume at 7:30. We will resume at 7:30, sharp at 7:30, and I will start with the 16.4. Then I will give the example on 16.3. Perfect. But sir, under yes, it is mandatory to capitalize. So how can we avail the ITC? Can you please repeat 16? Clear? Both are clear? Both are clear? Both clear? Fine. Fine, no problem. So what I will do, take the break of 10 minutes. I will start with 16.4. Then I will go to the 16.3 and will explain. Fine. 10-minute ka break. Fine. So now we need to start. Now we need to start 16 subsection 4. What is that? Time limit to take the ITC. Before starting this point, can anybody answer me? I'll appreciate. Can anybody answer me? When the 16.4 would not be applicable, or the time limit would not be applicable given in the 16.4, in which case the time limit given in the 16.4 would not be applicable? Very important question. So there is a doubt with respect to 16.3, and I need to give the, or I need to repeat the 16.4. Just to be sure, I will discuss both the point, but first give me the answer. The situation in which the time limit of 16.4 would not be applicable. Time limit of 16.4 would not be applicable. On which type of the ITC? The time limit of the 16.4 would not be applicable, sir. Which type of the ITC? The time limit given in the 16.4 would not be applicable. Very interesting question. Absolutely correct. Absolutely correct. If the ITC which has been claimed and then reversed because of 180 days, and whenever you are making the payment, you can reclaim on this reclaiming part. On this reclaiming part of the ITC, 16.4 would not be applicable, meaning thereby the reclaiming can be at any point of time in future. The schedule 1 and the RCM is talking about we are not required to reverse the ITC because of the 180 days. These are the point when we need to reverse the ITC. However, there are certain exception in which I can say the schedule 1 and reverse charge, and one more part is there. Great. Now let me talk about the 16.4. 16.4 is talking about the last date to take ITC. 16.4 is talking about the last date to take the ITC. Okay. What is the last date to take the ITC? They are saying the due date, and whichever is earlier, that is the last date to take ITC. Suppose A has issued the tax invoice to Mr. B on 1st June 2021. I can say 21-22. Mr. B, once he satisfied all the 5 conditions, he can claim the ITC, or the whatever the condition is applicable at that point of time, he can claim the ITC. Now, if he has missed that ITC, then what is the last date? 16.4 is saying first is due date of section 39 return of which month? Of September after the financial year, or annual return, furnishing of annual return, furnishing of annual return, whichever is earlier. Now the important point you should draw here, that in the first they are talking about the due date, in the second they are talking about actual filing. One more point, that what is the section 39 GSTR 3B return. So what is the due date of the GSTR 3B? What is the due date of the GSTR 3B? If it is monthly, then 20th after the end of the month, 20th of the next month, or if it is quarterly, then either 22 or 24 depending upon the quarter. Fine. So is it clear what is the last date to take the ITC? Any doubt with respect to 16.4? Then I'm moving to the 16 subsection 3. See, one thing is clear, one point is clear. Can you claim double benefit on a single component? Can you claim double dual advantage? Can you take the double benefit? Can you take double advantage of any transaction? Answer is no. I am talking about A has supplied to B one plant and machinery worth of rupees 10 lakh. And also there is a tax component 50,000. Total value is 10 lakh 50,000. See, in the normal pattern, what I will do, this I will capitalize, 10 lakh I will capitalize, and I will claim the depreciation. I will capitalize 10 lakh, take the depreciation on 10 lakh, and the 50,000 I will take the ITC, input tax credit. But 16 subsection 3 says, if you are claiming the depreciation on the tax component, meaning thereby, suppose I have capitalized 10 lakh 50,000. I have capitalized 10 lakh 50,000. I have capitalized 10 lakh 50,000. In that case, you cannot take the ITC because I am claiming the depreciation entire value including taxes. So I cannot take the second advantage. I am taking the question of Ayush, Hitesh, everyone. Like Hitesh is saying, 16.3 is that if we claim the depreciation, then we have no opportunity or right to claim the ITC. Absolutely correct. And if we allow, suppose if we allow, then what is the, whether it is logically correct, whether he is taking the single benefit, actually he is spending 50,000, but probably he will take the benefit of more than that. Because he will claim the depreciation and he will also claim the ITC, then probably on spending of 50 he will get the benefit of more than 50, which is ideally not correct. I am taking the question of Ayush, where depreciation has been claimed under IT Act. ITC cannot be availed on the purchase of those capital goods. No. See, they are not having any problem on 10 lakh. They are not having any problem of 10 lakh. See, what is ideally practice? Ideal practice, you will capitalize 10 lakh, claim the depreciation on 10 lakh. At the same time, I will take the ITC of 50,000, no problem. They are simply saying you cannot capitalize. If you are capitalizing including taxes part, you are claiming the depreciation on entire value, then you cannot take the ITC. Is it clear, Hitesh and Ayush? Karthik, accounting standard is mandatory to capitalize the asset value. On the taxes part, I have the option. So on the taxes part, I have the option. If I capitalize, no problem. If I want to claim the ITC, then not capitalize. So for taxes part, there is no mandatory that I have to capitalize. Mohammed is asking, if I not avail the ITC, do I collect GST when I sold that capital asset? Yes. That is also very interesting question. Let me answer in some time. But before that, I'm waiting confirmation of the Ayush and other participant who has raised the question, like Aishwarya, like Pooja, whomsoever has raised the question of 16.3, please confirm. Clear, na? Fine. Now, Mohammed, if I have not availed the ITC of capital goods, it means you have capitalized 10 lakh 50,000 and you are not claiming the ITC. Do I collect GST when I sell? Suppose in the sale of that capital asset, and the sale of the capital asset, will you pay the GST? See, there is two parts. Are you making the sale free of cost? If you will say answer is yes, I am assuming if you will say answer is yes, it will covered in the schedule 1 para 1, and by virtue of that no GST. If there is no consideration, then there is no GST, and if there is a consideration, yes, you need to pay the GST. Mr. Mohammed Takif, kindly confirm. And if I capitalize 10 lakh is correct, yes, Manan Rafi, absolutely correct. 10 lakh I will capitalize, 550,000 I will take the ITC. Is it clear? So move to the next part. We have completed till 25, almost 25 pages is completed. Now I will ask the question, you all give the answer. Be active in the chat. Sir, be active in the chat. Might be, you can say, might be, you can treat the same, as a revision or analysis, whatever you want, but you will focus on my question and give the reply. Whatever at the max you can give the reply at very fast. I'm requesting everyone to give the fast reply. Question is, so what I will do, I will not open the okay. Please confirm, is it necessary that purchase of the goods or taking the services should be in the course of furtherance of business for taking the ITC? Is it necessary? Is it necessary that goods or services should be in the course of furtherance of the business? The answer is yes, it is necessary. Next question I'm asking. Next question. You all tell me what are the 5 conditions for taking the ITC. I am talking about 16 subsection 2. What are the 5 conditions for taking the ITC? I'm giving you 2 minutes. Whatever the condition you can recall, please revert. Maybe 1, maybe 2, maybe 3, maybe all 5. There are the 5 conditions which we have discussed. 16.2 is starting with notwithstanding. Talking about the 5 condition. 4 was earlier, new condition. You all give the reply. What are the conditions for taking the ITC? What are the conditions for taking the ITC? There are the 5 conditions. The condition number 1 is don't know. I don't know. You all need to give the revert. Pooja has given the first answer, invoice or the debit note. Absolutely correct. There has to be the invoice or the debit note or any other tax paying document. I will ask further question after that, but I am waiting for 1 minute, 2 minutes. I am waiting for all of yours reply. Please give the answer. Waiting for your reply. 5 condition, whatever the condition you can mention, please put the condition. The first condition, Pooja has given the correct answer, invoice or debit note. Karthik is saying possession of invoice. Okay. GSTR1, communication, recipient of the goods, team. Oh my God, great. Fine. Filing GSTR1 before due date, Pooja, absolutely correct. Ayush, registered person. Okay. Possession of the recipient. Okay. Value plus taxes paid. Okay. Invoice and debit note document. Okay. Fine. Fine. Any other participant? Yes. Hitesh has given the answer. Debit note, received goods or services. Fine. Furnishing the return. Yes. Services are provided at the wow, great. Raghavan has touched deeming section. Bill to ship to model deemed to be received. Very correct. GSTR1. Great. Goods and services should be received. Now I am breaking the question. First condition is invoice or the debit note or any other tax paying document has been in the possession of the recipient. Can you tell me, in case of the reverse charge, if the supplier is registered, whether recipient will prepare self invoice? In case of the reverse charge, if the supplier is registered, whether recipient will make the self invoice? Somesh, Aishwarya, Prabhas, Kiran, Mohammed, absolutely correct. Whether in case of the reverse charge, recipient will make the self invoice if the supplier is registered, answer would be no. Can you tell me what is the name of the concept? Can you tell me what is the name of the concept which is being used for transferring the ITC by the head office to the branches? Can you tell me the name of the concept which is being used for transferring the ITC by head office to the branches? The first question which I have asked, answer would be no. There is no self invoice required. If the supplier is registered, no self invoice required. Section 31, subsection 3, clause F. If only supplier is unregistered, then you will make the self invoice. Supplier is registered, you will not make self invoice. My second question, what is the concept we are using for transferring the ITC? That is ISD, input service distributor. Input service distributor. Fine. Second condition, what is the new condition, sir? What is the new condition? Who will file which return? Supplier will file which return? Please tell me, according to the new condition, supplier will file which return? According to the new condition, the supplier will file which return? Supplier will file which return? GSTR1. What is the due date in case of the monthly? What is the due date in case of the monthly? GSTR1, what is the due date in case of the monthly? Supplier will file the GSTR1, absolutely right. What is the due date for filing the GSTR1 in case of the monthly taxpayer? What is the due date of the GSTR1? Requesting everyone. Raghavan, Daneshwari, Ayush, Hitesh, Pooja, Aishwarya, Karthik, Prabhas, Somesh, Kiran, Mohammed, everyone requested to give the reply. What is the due date in case of the GSTR1? That is 11th, and 13th in case of the QRMP, quarterly return monthly payment in the taxes. If the supplier will not file the GSTR1 by due date, will that transaction be appear in the GSTR2B of the recipient? Will that transaction be appear in the GSTR2B of the recipient? Answer is, will that transaction be appear in the GSTR2B of the recipient? Answer is no, it will not appear. It will not appear. Because if the supplier filed the GSTR1 by the due date, then only it will appear, otherwise not. Can you tell me name of the document, or you can say return, which is being filed by the QRMP in case of month 1 and month 2? Instead of the GSTR1, which document will be filed, which statement will be filed by the supplier in case of the QRMP, quarterly taxpayer? In case of the QRMP for month 1 and month 2, which statement would be furnished by the supplier so that it can appear in the recipient to be? Yes. IFF. What is the full form? Invoice Furnishing Facility. So that part we have discussed. Fine. Now third condition. The recipient has received the goods or services. What the recipient has received the goods or services, please tell me when it will be deemed to be received. When it will be deemed to be received. Please tell me when it will be deemed to be received. And recipient, even if not receiving the goods or services actually, but he would be able to take ITC. He would be able to take ITC, which even if the recipient not receiving the goods or services, but it will be deemed to be received the goods or services. The answer is bill to ship to model. Is it possible for goods only or for services also it is possible? Whether this deeming fiction is applicable only for the goods or for goods and services both. Whether this deeming fiction is applicable for the goods or it is applicable for goods and services both. The answer is services also, sir. We have seen two explanations. One explanation for the goods, second explanation for services. Great. Now tell me, within how many days if the supplier not receive the payment, if the recipient not make the payment to the supplier, then recipient has to reverse the ITC. How many days recipient not make the payment to the supplier, he has to reverse the ITC. When he has to reverse the ITC with the supplier, if the payment is not made to the supplier within how many days? Answer is 180 days. Absolutely correct. Karthik, Prabhas, and everyone was giving the response. Thank you so much. Now you tell me there are three exceptions. There are three exceptions. I want third exception from each one of you. First exception RCM, everyone knows. I don't want. Second exception, all knows. Which exception, sir? Wherein the payment is not required to be made. First exception RCM, second exception Schedule 1. Please tell me third exception, wherein there is no requirement of payment and also the ITC need not to be reversed. I need third exception. I need third exception. I need third exception. I need third exception from each one of you. Of which part I'm asking? I'm asking in which case there are the three exceptions. In these three cases, if the payment is not made or it will be deemed to be paid or there is no requirement of reversal of ITC. First is reverse charge, agreed. Second is Schedule 1, agreed. I need third one because third is still not clear to everyone. Third is still not clear to everyone. Repeating again, the answer is 15 subsection 2 clause B. Absolutely correct, Karthik. And Prabhas, thank you so much. A is a supplier, B is a customer. If there is a liability of supplier but incurred by the recipient and that particular part has been excluded in the value, let's say A has agreed that I will give this services or give this goods for rupees 1 lakh. But what happened? Mr. B has made the payment on behalf of A, let's say 20,000. And now A is raising the invoice of rupees 80,000. Not possible. Why not possible? 15 subsection 2 clause B say add 20,000. Sir, why need to add? The responsibility is of the supplier. Clause B says if recipient has incurred the expenditure on behalf of A and the value has been excluded, then please add back. Please add back. 80 not permissible. By virtue of the 15 to B, you have added 20. What is the total invoice value? 1 lakh. Will B make the payment of entire 1 lakh? Answer is no. He will not make the payment to the extent of 20,000. Now for 20,000, would Mr. B need to reverse? Answer is no. Why? Because of this deeming fiction. It will be deemed to be paid. Whatever the value is being added according to the 15 to B, it will be deemed to be paid. Kindly confirm, is it clear? Kindly confirm, is it clear? See, you may easily write RCM, you may easily write Schedule 1, but this part I have some doubt, so that is the reason I have asked and also explained once again. Please all confirm whether 5% excess ITC concept is applicable, whether 5% excess ITC concept is applicable in current date. after the amendment, whether 5% excess ITC concept is available, whether 5% excess ITC concept is available. No, not available. Why not available, sir? 16 to double A, 16 to double A, new condition. Only when the transaction appear in the 2B, you can take the ITC, otherwise not. Sir, extra, forgot about the extra. So I can say these all part which we are talking about, the GSTR 2A is become redundant, is become not applicable. So all these example in which there is a concept of 5% extra ITC, I can say this part has been amended. So like this 5% extra ITC, etc., is all these concept has been gone. Now 18 invoices, 20 invoices. Is it applicable? Now not applicable. Is it applicable? No, now not applicable. Now not applicable accordingly. So please accordingly stuck down this particular pages or not read this example, not understand this concept. Why? Because 16 to double A, 16 to double A. Again, I am not reading second example. Bill to ship to model we have discussed already. This some sort of the example we have taken also. Tax actually paid to the government we have discussed 16 to C. Filing of the return 16 to D. So we have discussed only two conditions. What is three conditions we have discussed? Fourth condition, tax has been paid actually by the supplier to the government. Now, can you tell me the last condition that GSTR 3B has been, see, what is the GSTR 3B? It is a section 39 return. What is the GSTR 3B? It is a section 39 return. You tell me the last condition is talking about the filing of the 3B by the supplier or by the recipient. The last condition is talking about by the supplier or by the recipient. Last condition is talking about by the supplier or by the recipient. The GSTR 3B has to be furnished by the supplier or by the recipient. They are talking about the last condition that furnished the return under section 39. Is it related to the supplier or is it related to the recipient? Absolutely correct, Karthik. They are talking about recipient. You might or it is the possibility to put incorrect sentence statement that you may talk about the customer. You may talk about the supplier. No, it is talking about the recipient. So always remember it is recipient. Fine. So on the lots or installment, the good ITC would be available on the last lot. We have discussed payment of that to be made within 180 days. We have discussed in length. So this question I have asked that yes, deemed supply addition made to the value of the supply is on account of the supplier's liability in relation to supply being incurred by the recipient. This part we have 16.3 depreciation claimed on the tax component ITC will not be allowed. Time limit for taking the ITC. Now tell me, time limit for taking the ITC. We are talking about two return, annual return and section 39 return. Please tell me section 39 return. Is they are talking about the due date or furnishing? Here, in which return, section 39 or annual return, in which return they are talking about the due date? In which return they are talking about the due date? Prabhas, statement is not correct. You cannot say 3B filed by the recipient for outward supply. 3B is a monthly return, summarized return. Consider or covering all outward as well as inward supply. So you cannot say the outward supply, because if I'm restricting outward supply, it will be only GSTR. The section 39 return and annual return, which return they are talking about the due date and which return they are talking about the furnishing? For which return they are talking about the due date and for which return they are talking about the furnishing? For which return they are talking about the due date and for which return they are talking about the furnishing? Important. For section 39, yes, for section 39 they are talking about the due date And for annual return, they are talking about actual filing, furnishing of the annual return. In the soft copy, I think that amendment is not updated. That amendment is not updated. Only two-pager amendment. Only two-pager amendment is not updated. Rest we are referring the material only. Thank you so much, everyone. So section 39 return, they are talking about due date up to which month? Due date of which month? Due date of which month they are talking about? Due date of which month they are talking about? Due date of which month they are talking about? Great. Due date of which month they are talking about? Section 39 return has been furnished of which month? September after the end of the financial year, or annual return, whichever is earlier. Annual return, whichever is earlier. Let's move to the section 17. Let's move to the section 17. Let's move to the section 17. What is the section 17? Conceptually, you tell me, if my outward supply is exempted, would I be able to take ITC? Suppose I am doing some transaction which is fully exempted. I'm a publishing house making the books and selling the books which is entirely exempted. Would I be able to take ITC in that case? Would I be able to take ITC in that case? If my outward supply is exempted, would I be able to take ITC in that case? Yes or no? The answer is no. Answer is no. I won't be able to take ITC. So if my outward supply is taxable, I will be able to take ITC. If my outward supply is exempted, I would not be able to take ITC. I would not be able to take ITC. If I have purchased, let's say I have purchased some stationery item for personal use, do you think that ITC would be available? Do you think that ITC would be available for my personal purpose? I have purchased certain stationery item. I have purchased, say, television. I have purchased, let's say, computer for my personal use. Will I be able to take ITC of the personal item? Non-business use? Non-business use, I won't be able to take ITC. So what is the main point? 17(1) and 2 are saying, if you are using partly for business purpose, partly for non-business, or partly for taxable supplies, partly for exempted supplies, you will be able to take ITC only to the extent of business use, only to the extent of taxable supplies. Repeating again, I'm repeating again. 17(1) is saying, if I am, say, purchase goods or certain services and using for business purpose and non-business purpose, I would be able to take ITC to the extent of business purpose only, right? Or in other word, I can say I have to reverse the ITC to the extent of non-business purpose. Both the sentence are same now. Say I can say I would be able to take ITC only to the extent of the business purpose, or I can say from gross ITC I have to reverse the ITC pertaining to the non-business purpose. I use, that's why no, answer is yes. And there is one more reason, 17(5), that is also one or more reason that answer would be no. Similarly, if I am purchasing the goods and services and my outward supply is taxable as well as exempted, 17 subsection 2 says that you can take the ITC to the extent of the taxable supplies. I can say that to the extent of the taxable supplies, I would be able to take ITC. Till now, is it okay? And in the section they are saying taxable, in that they are saying including zero rated supplies. What is the meaning of zero rated supplies? 16 subsection 1 of IGST Act says that two type of the supply are zero rated. One, export, and second is supply to the SEZ unit or developer. Meaning thereby, even if I am making the supply of the books to the SEZ unit, still I would be able to take ITC. Going back, summarizing the discussion. 17.1 says that I would be able to, if I am using the goods or services for business purpose and non-business purpose, I would be able to take the ITC only to the extent of the business purpose. Similarly, if I am using the goods, if I am using the ITC for two type of the supplies, taxable as well as exempted, then I can say to the extent of the taxable supplies, I would be able to take ITC. Now, again, this part is not in our syllabus, rule 42 and 43, but these provide the calculation methodology, how I will determine the amount to reverse. Bharat, for you, I am giving just one pointer reply that the rule 42 and 43 prescribe the method how to calculate the reversal component. There is a T1, T2, D1, D2, C1, C2, multiple calculation is there. You are not required to perform the same because it is not in your syllabus. If I am making the zero rated supplies, what is the question? If I am making the exempted supplies out of India, would I be able to take the ITC? Answer would be yes. Why yes? Because once I do the export, it is called as zero rated supplies, and zero rated supplies I would be able to take ITC. I would be able to take ITC. Let's go back and read the language of the 17.1 and 2. What is the 17? Apportionment of the ITC or credit and the block credit. That we will discuss in the next class. 17 subsection 5. Very important. Very important. Where the goods or services or both are used for the purpose of business and partly for other purpose, means other than business, ITC shall be restricted to so much of the amount which is attributable to the business purpose. Similarly, 17 subsection 2 is saying that when the goods or services are used by the registered person partly for taxable, and please see, in the taxable they are writing the word including zero rated. What is the zero rated? Export and supply to the SEZ unit or developer, and partly for effecting exempt supply, then amount of the credit shall be restricted to so much of the ITC which is attributable to the taxable supplies. Any question till so far? Please ask. Any doubt till now? Please ask. Or is it clear? Kindly confirm. If it is clear, kindly confirm. Now, I am saying that you need to calculate that exempt supply. How much is the exempt? How much is the taxable? The word exempt supply has been explained in the 17.3. In the 17 subsection 3, they are defining the word, or they are enlarging the exempt supply. Please note. Meaning thereby, if I have some outward supply which is covered in the 17.3, in that case, to that extent, I won't be able to take ITC. What is the exempt supply? So let's read the language of the 17 subsection 3. The value of exempt supply as may be prescribed. So you can refer the exemption notification for the goods as well as for services, and also include first the supply on which supplier pay the tax under reverse. Supplier is not liable to pay the tax. Recipient will pay the tax under RC. Meaning thereby, suppose A is making the supply to B and A is a advocate. A is an advocate making the supply to B, and total value is, let's say, 1 lakh rupees. Legal consultancy 1 lakh rupees. On 1 lakh, you have confirmed me at the start of the class also that the tax will be paid by recipient. In the hand of Mr. A, this supply, this legal service will be considered as exempted and he won't be able to take ITC. Suppose advocate has an office on rent on which he is paying the GST. He has purchased computer on which he is paying the GST. Let's say he has purchased stationery item, stamp paper, paid the GST on some goods and services, not going respective category, only saying that if he paid the goods and services on which he has purchased the goods and services and he has paid the GST, will he be able to take ITC? Answer would be no. Why no? Why no? Because according to the 17.3, legal services given by advocate on which RCM is applicable, advocate will not pay the tax, recipient will pay the tax under RCM. So in the hand of Mr. A, that particular supply is considered as exempted, and because it is exempted, won't be able to take ITC. Puja, if there is further sale, taxable supplies, then we can avail ITC. Yes. On the contrary, if we take for personal use or we can not avail that. Correct. Absolutely correct. Absolutely correct. So I think you are giving the statement for clarification purpose, right? You do not have any question. If you have, then ask again. Bharat, clear? Okay, fine, no problem. Great. So 17.3 is further saying that transaction in securities, then it will again be the considered as exempted supplies. Sale of land subject to clause B, para 5, schedule 2, sale of building. What is that? What is that? Can anybody tell me? Can anybody tell me where this sentence is written? In which schedule it is written? This is a particular extract of one of the schedules. This is a particular extract of one of the schedules. Can you tell me that which schedule it is talking about? Karthik, repeat again. I will repeat again, no problem. If it is not clear, just tell me. I will repeat again, no problem. Schedule 3. Schedule 3. Thank you so much, Somesh. Excellent. Now, for the purpose of 17.3, I am going to discuss something about Schedule 3. For the purpose of 17.3, Schedule 3. How many line item, how many transactions are there in the Schedule 3? Can anybody tell me how many transactions or how many activities are there in the Schedule 3? How many transactions are there in the Schedule 3? How many transactions are there in the Schedule 3? How many transactions are there in the Schedule 3? No problem, Pooja. You don't remember? No problem. No, not an issue. Which sentence? That sale of land and sale of building. That sentence I'm talking about types. There are total 8 activities, not 6, sir. There are total activities. 6 was earlier there and 2 was added on. 2 was added. 2 was added. So out of the 8, I am dividing para 5 at one side and rest 7 entry. Rest 7 entries at another side. Rest 7 entries at another side. Why I am doing this bifurcation? For the purpose of 17 subsection 3. Please remember, you may commit the mistake if any question is being asked. Schedule 3, para 5. For the purpose of 17.3, this part is considered as exempted supplies. And rest of the 7 entries, it will be considered as not exempt supplies. It will not be considered as exempted supplies. Therefore, I can say here, to the extent of that, ITC need to be reversed, and here no reversal required. Repeating again, why we are discussing 17.3? Why we are discussing 17.3? I am revising. Karthik, and for benefit of all, I am repeating the 17 subsection 3. Sir, in 17 subsection 2, we have discussed that if outward supply is taxable as well as exempted, if outward supply is taxable as well as exempted, I can take the ITC to the extent of taxable supplies. Clear? What is the meaning of exempt supplies? They have defined the same in 17 subsection 3. Why we are referring 17.3? So that we can understand how much is the exempt supplies and therefore how much part I need to reverse. Fine. What is the 17.3? They are saying 17.3 is the exempted supply first as may be notified. It means you may have to refer the notification, whatever it is being prescribed. Then they are saying if outward supplies covered under RCM, that will also be the exempt supply. Third, sale of securities, it will also be considered as exempted supplies. Fourth, sale of land, and I will say completed sale of land and completed building. Why I am using the word completed building? Because it is written schedule 2, para 5, clause B. Till now it is clear. Everyone please confirm till now it is clear, so that I can repeat the concept of schedule 3 which is being used in 17 subsection 3. I will explain the concept of schedule 3 once again, but meanwhile you please confirm this concept is clear. Karthik and everyone. Clear na? In the schedule 3, there are 8 activities or the transaction which are considered as neither supply the goods nor supply the service, in which there is a one para 5 which is talking about sale of land and sale of building. What is that written in the building? Schedule 2 para 5 clause B. So it means completed building. If it is completed building or if it is land, then there is no GST. But that will be considered as exempted and therefore you need to reverse the ITC. Schedule 3, in which chapter? Supply. And for rest of the 7 entries of the schedule 3, you are not required to be reversed because it is not considered as exempted. Going back to the notes or going back to the presentation of study material of institute, read the explanation. For the purpose of this subsection, 17 subsection 3, the expression value of exempted supply not include, exempted not included. Which not included? The schedule 3 except one para 5. I hope it is clear. Sneha. Now 17.4 is saying, in case of the banking company, financial institution, NBFC, if they are also providing the taxable as well as exempted supplies, so they have given one option. What is that option? They have given one option. What is that option? That the banking company, etc., who are providing, accepting the deposit, loan, advances, which is exempted because interest is an exempted supplies. So they are making the taxable supplies. They are also making the exempted supplies. So the banking company, can we say 17.2 is applicable for banking company also? Yes, it is applicable. Why? They are earning the interest, which is exempted. They are might be earning credit card processing fees, credit card interest, which all are taxable. bank charges, all are taxable. Meaning thereby banking company, financial institution, they are also making two type of the supply. One is taxable, one is exempted. So normal concept 17.2 would come into the picture. They have to reverse according to the 17.2 rule 42-43. But what is the benefit given to the banking company, etc.? They have given the one straightforward 50% reversal concept, that they can straightforward reverse the 50%, not required to comply the so much complex formula given in the 40-43. Fine. But please note one thing, in calculation of ITC 50% which need to be reversed, we will exclude one component. That option once, sorry, this part, second proviso, shall not apply on the supplies made by one registered person to another registered person having the same PAN. Can you first question to all of you? There is one technical name which is being given to this particular person. One registered person to another registered person having the same PAN. So two GSTIN number under one PAN. What is called? One. It is a one good name. What is the name of to that particular person? One PAN, two GST number. Striya Sa, Miss Striya Sa, your point, your query is related to 17 subsection 5. We will discuss over there, not now, because if I will discuss, give the answer right now, confusion is there. There are certain conditions we will discuss in the 17.5 in the next class on Monday, and then conclude the particular query. Distinct person. Suppose I am talking about ICICI Bank, Delhi branch, and ICICI Bank, Mumbai branch. They are making the supply, and because we know that schedule 1 para 2 distinct person, supply become taxable, and they have to raise the tax invoice. He has raised the tax invoice on which there is a ITC of 20,000. There is a component of taxes of 20,000. Fine. The total ITC for the month of the June, total ITC of ICICI Bank Delhi branch for the month of the June, 1 lakh. Now, whether 17.2 would apply on ICICI Bank Delhi or any ICICI Bank or any bank, would 17.2 would apply? Yes, it will apply. Why? Because they are making some taxable supplies like credit card processing charges, bank charges, interest on the credit card loan, taxable. Similarly, interest on this part, loans and advances, deposits, exempted. Means banking company are also making taxable supply and exempted supplies. Therefore, 17.2 would come into the picture. Therefore, we can say they also need to reverse the ITC, or they can take the ITC only to the extent of taxable supplies in the turnover ratio. But that formula 40-43 is comparatively tough or comparatively complex. So 17.4 has given one straightforward calculation method. What is that? See, ICICI Bank, how much is the ITC there? 1 lakh. Simply they will reverse 50%. But in the reversal of the 50%, they will exclude the distinct person ITC. Meaning thereby total ITC 1 lakh minus 20,000, balance 80,000 ka 50%. So therefore they will reverse 40,000. Rest ITC 40,000 plus distinct person full ITC would be available. Total ITC which is available is 60,000. Give me the confirmation. Is it clear? A conversion on currency for taxable and credit card charge. See, I use credit card is taxable. Credit card charges is taxable. Interest on loan, advances, etc. that are exempt. Is it clear? 17.4 is clear to all. From my side, 17.4 is completed. Give me the confirmation that 17.4 is clear to all. So this is 17.5, very, very important. We will discuss in the next chapter. In the next class, we will discuss this particular part in the next class. Sure, no problem, Bharat. I will repeat. I will repeat. So like we are talking about the banking company. In case of the banking company, they are making taxable supplies as well as exempt supplies, so they can take the ITC only to the extent of taxable supplies. Normal concept of 17. So I can say the banking company also need to reverse some ITC to the extent of exempted. How to do the reversal? There is two methods. Either they will go for rule 40 to 43, or they will straightforward reverse 50%. Either comply the provision of the subsection 2, 17 subsection 2, which talks about rule 40 to 43, or straightforward reverse 50% or avail 50%. This option, that which option they like to go, sir, which option they like to go, they need to convey the same, or once it is being exercised, they cannot change during that financial year. Any one option can be exercised during the entire financial year. Karthik, first proviso simply that, so on monthly basis they have to do the reversal. So on which method they are using? Suppose for the month of April they are using 50%. For the month of the May they like to switch to the 40 to 43. Not possible. They have to stick with one options for the entire financial year. Okay. Now for reversal there is two methods, because 17 subsection 2 is talking about you have to reverse the ITC according to the rule 40 to 43. 40 to 43 is not in our syllabus, no problem, but otherwise we need to reverse the ITC. Or for banking company, 17.4 has given one more option, that according to the rule 38. Give me 1 minute. Any question? So we'll discuss. Similarly, like here the rule 40 to 43 is being given, here is a rule 38 is given. What is that? You can avail 50% and reverse 50%. Simple. But for reversal 50%, you will not require to reverse any component of distinct person ITC. So in my example, I was saying there is a total ITC of 1 lakh, out of which 20,000 pertain to the distinct person. So I can say balance ITC, he can take 40% and balance 40 need to be reversed. So what is the total ITC available? Out of 1 lakh, he need to reverse 40, balance 60,000 would be available ITC for banking company. First proviso says that he can, he has to, once any option which is being exercised will remain for the entire financial year. Second option saying that distinct person ITC, there is no requirement of reversal. Is it clear? Kindly confirm. Okay, clear. Karthik is saying clear. Bharat is saying clear. Mehman, Rafiq bhai, is it clear? Ayush already clear. Somesh, it is not unrelated. It is distinct person. Fine. Any other question? You can ask any question on this chapter. You can ask. Sorry. You can ask any question on this chapter. You can ask any question on this chapter. You can ask any question, any point which is not clear, please ask. The topic is completed from my side. The today class is completed from my side. It's over to you for asking any question. If you have any question, kindly ask. (17.4) Please confirm that it is nature if services between distinct and need not to be checked on the ground of the taxability or exemption. Not required to be that. See, Karthik. See, if the transaction is exempted, even if the transaction is exempted, then there is no question of tax. There is no question of ITC. We are saying in the 17.4, ICICI Bank Delhi, out of the total ITC, he will exclude the ITC of the distinct person. We are talking about inward supply. On inward, they have to pay the taxes. It will always taxable supplies. unless and until it is exempted. So if it is exempted, see, you are asking very good question. We are not required to see ICICI Bank Mumbai outward supply whether taxable or exempted. We are not required to see outward supply of Delhi whether taxable or exempted. We are talking about one outward supply of Mumbai to Delhi. For Delhi, it is an inward, and because of the schedule 1 para 2, it is taxable supplies. Need to pay the taxes, and 20,000 is being paid. So on the balance part, the 50% formula would be applied. Is it clear, Karthik? Sushil Kumar, who is IST? Let me explain once again. See, there is a head office and there is a branches. Let's say head office is in Mumbai and branch is in, one is Delhi, one is Haryana, one is Rajasthan, let's say, or one is Kerala. Head office, if head office is taking certain services for the benefit of the branches, let's say audit function. Head office is hiring audit, chartered accountant hiring, and they are conducting the audit. The audit would not only for the head office, they would be for the branches also. We can say it is a common services. Yes, on that common services, they have the concept of input service distributor. Bifurcate the word input service distributor. See, if the ITC on account of the services is there, then head office can take the registration separately in the ISD category. See, ISD is not the regular category. In the ISD category, they will file the GSTR 6, not the GSTR 1 or 3B. In that case, what is the benefit? They can distribute the credit to the branches, because normally head office does not have any outward supply. Normally does not have any outward supply. Therefore, they can transfer the ITC so that branches can utilize ITC. There is no loss of the input tax credit. Is it clear? Somesh, will additional question taken in the class on amendment part in each chapter? Additional question, amendment part. See, amendment part would be taken care. Additional question, whatever it is written in the books, we will try to close first. Really, not all possible, but yes, we will take 1 or 2 questions, broad, bigger question also, if time permit. 17.3 is not clear to me. Pooja, can you tell me what is the part which is not clear to you? See, let me quickly tell you. 17.3, sorry. 17 subsection 3. See, 17.2 is simply saying that you need to reverse the ITC if you are making exempted supply and you are using for taxable supplies also. In that case, what is the meaning of exempt supply? See, what is the meaning of exempt supply? Who will decide? 17.3. See, if 17.3 would not be given, exempted would only be the notification, would be limited to the notification of exemptions. But what they are saying we will cover outward RCM, consider as exempted. We will cover sale of security as exempted supply. We will treat sale of land and completed building as an exempted supplies. We will not treat other 7 items as exempted supply. So by this 17.3, it is clarified. See what happened when you apply the 17.2, you are required to reverse ITC. You will reverse normally according to the 40 to 43, you will apply in the turnover ratio. So you need to calculate the turnover of taxable supplies. You need to calculate the turnover exempted supplies. How you calculate the exempted supplies? Will you take only exemption notification? 17.3 is saying no. Exemption notification, add this 3 transaction: outward covered under RCM, sale of securities, and sale of land and building. This part you need to add, and this is total exempted. What is the total taxable? Then apply the formula. Is part clear? Pooja, kindly confirm. Is this part okay? 17 subsection 3. Thank you so much, Karthik. Is this part clear? If still not clear, I do not have any problem to repeat again. I do not have any problem on any part to repeat again. Please ask. You ask the question, I'll give the reply. Great. So if there are any question, I'm waiting for 1 minute. I'm just waiting for 1 more minute. If there is any question, we can take. Otherwise, good night to all of you. We'll meet on Monday. Ensure to join the class and live class. You might have the access to the recording. That is okay. But please join the live because this discussion is very helping. Great. Thank you, Rafiq bhai. So I hope there is no question. Thank you very much. Good night to all of you. We'll meet on Monday. Start with the 17 subsection 5, that is block credit. Very important discussion. Thank you very much. Good night to all of you. Ram Kumar ji. See, just wait for a minute. Just wait for a minute only. Only for 1 minute. So if any participant asks the question, so that we can revert. Otherwise, we can conclude. Only for 1 minute. Thank you, Ayush. Thank you, Pooja. Aishwarya, thank you. Ramakrishnan ji, very much. Thank you very much. Thanks for your appreciation. Fine. No doubt. Great. Good night. राम कुमार जी कंक्लूड कर सकते हैं.